Hi there, welcome to Kneppy Invests. Time for another buy, hold or sell. And in this video, I am going to be discussing Bond, Laserbond. This is an interesting company. I've actually been following it for about 3 years, and we have seen the share price go up a fair bit during that time period. Never been an owner of this company, but things are looking interesting for Laserbond right now. Now, this is my second buy, hold or sell video. The first one was on Reliance Worldwide Corporation. So I'll be looking at 3 factors that I do take into consideration when I am thinking about buying into a company. And those 3 things are the financials of the company, in particularly looking at operating cash flow, profit and revenue. And I do prefer an upwards trajectory in all those 3 things through time. Now, looking at the financials is always looking in the past, and the market is always forward-looking. So that's one negative thing about just focusing on the financials. Also, look at valuation. Is the company looking expensive valuation-wise right now? And also compare the valuation of the company to its past as well. And also looking at the sentiment in the company. So that's focusing on the charts. And even though that is also backward looking, it can give you some clues about where the share price might be heading in the short to medium term. Now, I won't be talking about other factors I will take into account when I'm thinking about buying into a company, like the management, the things the company does, like does it have a moat, those sort of things, and does it what size is its market. So I won't be talking about those sort of things in this video, but I still take those into account. These are the 3 things I tend to focus on the most when I'm considering buying into a company. Before we get stuck into whether Laserbond is a buy, hold or sell, for me, looking at those 3 things I do focus on, just a few facts in regards to this company. They are a specialist in surface engineering. They focus on the development and application of materials, technologies, and methodologies to increase operating performance and wear life of capital-intensive machinery components. So if you just think you're in a factory and using this machinery continuous, maybe even 24/7, eventually it's going to wear away, particularly the components in that machine. And most of the wear away of the components is right at the surface, hence why Laserbond is a specialist in surface engineering. Founded in 1992, so this company has been around for about 30 years, and they listed on the ASX in December 2007. So they have been listed for a while, and the majority of their listing on the ASX has not been really successful. It's only been the last 3 years where we've seen a bit of action in Laserbond's share price, and the financials of the company have been improving. The CEO is Wayne Hooper. He's actually been working for Laserbond since 1994. I'm not sure when he became the CEO. He also has 11.4% stake in this company. And funnily enough, the 4 biggest shareholders in this company all have a last name of Hooper. So it seems like the Hooper family have a significant stake in this company. I'm not sure what relations they all are. Maybe they're brothers, sisters, husbands, wives. But together they have a 33% stake in Laserbond. No significant major fund managers that I did see were on the shareholder list. And that does or is interesting for me, because that means there's no funds interested. And if this company can increase their profits, we'll start to see funds getting interested. And when funds start to getting interest, they will drive the share price higher. And the market cap of Laserbond right now at 93 cents is $90 million. And the ticker code is LBL. Now onto the financials of Laserbond. And in this slide, what I'm going to be focusing on is their financial year 21 numbers. And in brackets, I've got their financial year 20 numbers. So we compare how Laserbond has performed from last year to this year. Revenue, only 24.7 million, and that has increased from last year, which was 22.2 million. Gross profit margin has decreased a little bit, but still fairly good at 51%. I do look for companies with high profit margins, and I would prefer gross profit margins to be increasing through time. Net profit after tax hasn't changed from last year, still at $2.8 million. and they were operational cash flow positive by $4.8 million for the financial year 21, up a little bit from the previous year. And that's also including financial leases, which was about 1.7 million. And I do believe you have to take that into account. And if you do take that into account, the operating cash flow is just above their net profit after tax. They have about $5 million of cash on hand, not a lot of debt, and they're spending around about $700,000 on research and development. And so the enterprise value of the company, so that is just taking the market cap and adding or subtracting the net cash, it gives a total enterprise value of 85 million. So not too stretched for a company that is profitable, increasing operating cash flow. And the only thing we have to do now with the financials is just to see how the company has been progressing over the last 5 years. So from last year to this year, we have seen a little bit of an increase in some of these financial numbers, but not too much. So we can't really say right now that this company has been performing steadily in the past year, but maybe this is a little bit of a hiccup. So I do like to see how the company has been performing over an extended period of time. So let's have a look at that right now. When I look at the historical financials for a company, I tend to look at least 5 or even 10 years of history. And I always want to see an upwards trend in operating cash flow, profit, and revenue. If you don't see an upwards trend in revenue, then the only way a company can increase their profit and the operating cash flow is to cut costs. And cutting costs is not something you can do for an infinite amount of time. It may be just a 1-year thing or a 2-year thing. So I want to see an upwards trend in all these 3 things I look for. The revenue is the black line, and that has been increasing over the past 5 years. So what I've got here in this chart is the half-yearly numbers. And we definitely have seen an increase in revenue over the past 5 years, and gross profits increasing. And even though operating cash flow is increasing, it can be quite lumpy. But overall, we are seeing operating cash flow increase through time for Laserbond. If you calculate the compound half-year growth rate in all these 3 things, we do see it increasing through time. Revenue 8.3% per half year, gross profit 8.5%, and operating cash flow at 40.6% per half year. That's on a low base, because if you go back to the second half of financial year 16 to look at the 10 half years ago, the operating cash flow was only 0.1. That's why you have operating cash flow increasing at 40% per half year. If we only look at the last 9 half years, that number comes down to 15% per half year. It's still increasing at a greater rate than revenue and gross profit. So everything's increasing. The financials of this company look pretty good for a market cap of only $90 million, enterprise value of 84 or 85. So when you look at the financials of Laserbond, I definitely give this a good buy. Next thing I want to look at here for Laserbond is the sentiment. The way to gauge the sentiment of a company is just looking at a chart. And this is the weekly chart for Laserbond going back 5 years. And this is a perfect chart for a company that has positive sentiment behind it. If we go back to 2016, the share price of Laserbond was around about 10 to 13 cents. And for the next 2 years, up until August 2018, the share price of Laserbond was just going sideways. Not a lot of interest in the market for this company. You can see that with the volume, very low volume. It wasn't until August of 2018, when they probably released their full-year results, that the market got a little bit of interest. You can see a bit of a spike in volume, and the share price broke out. In fact, the share price went from about 12.5 cents to 17.5 cents. And that was the breakout in Laserbond, the share price, because from then we saw a major re-rating of the company's share price over the next, we'll say, 2 years, because the share price went from that 15 cents to a top of over 90 cents. So that's a 6-fold increase in the share price over about, actually it's a 1-year period. And that's all about positive sentiment. More than likely, they would have released some good financial numbers that the market did like in that financial year 2018 results in August. We did see the share price pull all the way back to the low 20 cents during the COVID-19 financial panic. But since that low, we have seen positive sentiment come back into Laserbond, and it has reached an all-time high a few months ago. The share price actually did get above $1 for a brief period of time. But just looking at the weekly chart, a definite uptrend. The share price is continually going up. You see little waves in the share price, and we did see a recent pullback to about 75 cents, and that would have been a good time to buy because the share price went to the 50-week moving average. And every single time we've seen share price get around about the 50-week moving average over the past 9 to 12 months, we've seen the share price go up again. So that was another sign that this share price is in an uptrend, that as soon as the share price got to that 50-week moving average, it started going up again. Share price currently for Laserbond is 93 cents. Which is near the all-time high of $1. So I would not be surprised if we continually see the share price go higher for here, because there is a fair bit of positive sentiment behind this company. I have heard a bit of chatter around, I won't say some forums, and I think also it was in Strawman. There was a lot of positive chatter in that side. Unfortunately, Strawman has gone private, so I can't see if that chatter is still there, but definitely in Strawman there was a lot of positive chatter behind Laserbond, and that was at least maybe a year or 2 years ago when I started to see that chatter. So a lot of positive sentiment behind Laserbond, and that positive sentiment has been driving the share price higher. The question I have moving forward with Laserbond is, why has the share price been increasing? Is it because of the financial performance of the company, or is it because this hype and positive sentiment has been driving the share price higher? And the way you answer that is just to see if it's the financial, or if the share price has been increasing because of financial expansion or multiple expansion. And we're going to explore that when we look at the valuation of the company. But when you look at the sentiment behind Laserbond right now, definitely there is positive sentiment behind this company, and that's why I give this a good buy. The first step in evaluating the valuation of Laserbond is just looking at what the share price is now, or at September 27th, and just looking at some valuation metrics, including enterprise value to operating cash flow, PE ratio, price to sales, and price to book. And a share price of 94 cents, the EV to operating cash flow, 17.7. I would say that's neither high or low, but it's getting towards the higher end of what I would like. PE ratio 31.9, again, a little bit high, but they don't have a lot of profit after tax. So I definitely could see Laserbond double their profit in a year's time, which would decrease the PE ratio to like 15 and then double again. And if the share price doesn't increase, the PE ratio all of a sudden in 2 years' time would be like 7. Price to sales ratio 3.6, price to book 6.3. So just looking at these numbers in isolation, I wouldn't say there's any good value in Laserbond now, but there is potential we might see the company grow just because this positive sentiment. The market is seeing something there, and we might see some of these numbers come down if the profitability of Laserbond just explodes in the next year or two. Now I'm just going to explore why, or what's been driving their share price higher over the past 3 years. On August 2018, the share price was around about 13 or 15 cents. Now it's over 90 cents. So we've seen a 6-fold increase in share price in 3 years. But what has been driving that increase in share price? Is it financial expansion, operating cash flow, net profit increasing? Has that been driving the share price higher, or has it been multiple expansion, just an increase in the PE ratio, an increase in enterprise value to operating cash flow? And what usually drives that higher is positive sentiment. So I've already talked about, looks like positive sentiment is driving the share price higher. You can actually show whether it is positive sentiment or financial expansion driving the share price higher by looking at the growth rate in particular metrics and compare that to the share price and market cap increasing. I did a video on financial and expansion and model expansion, and I'll leave a link to that video in the description of this video. So have a look at that video if you're not sure what I'm talking about in regards to multiple expansion. So what I'm going to show you now is the growth rate in revenue, gross profit, operating cash flow over the past 5 years, and let's compare that to how the share price and market cap have been growing over the same period of time. Revenue and gross profit have both been increasing about 8%, and operating cash flow at 41%. But that was off a low base. If you take the next half year, operating cash flow only been increasing about 15% per year. However, the share price and the market cap have both been increasing about 22% per year. Now, the reason I like to look at share price and market cap growth rate is in case a company has been doing capital raisings, and since share price and market cap have been growing at similar rates here, that tells me straight away that Laserbond haven't done many capital raisings over the past 5 years, and that is definitely true. So at this point in time, just looking at the growth rate in share price and market, significantly higher than what we're seeing with revenue, gross profit, even operating cash flow, taking away that low base, tells me that there has been a bit of multiple expansion happening with Laserbond. So that's the primary reason the share price has been increasing. There's been a little bit of financial expansion happening because we have seen the financial metrics increase through that period, but it's positive sentiment. That's been the biggest reason the share price of Laserbond has increased sixfold in the past 3 years. Since the whole of Laserbond's increase in share price from 15 cents to 90 cents has occurred in the last 3 years, not 5 years, if we just look at the growth rate in all these metrics over the past 3 years, we can even see how the share price and market cap of this company has really gone or grown at a significant more or greater rate than the financial metrics of this company. Revenue, gross profit, still around a 7 to 9% growth rate over the last 3 years or 6 half years. Operating cash flow grown at 60% over the last 3 years, but again, that's on a low base. If we go back 3 years ago, I think the operating cash flow 3 years ago was about 0.2 or 0.3. If we take away that one sort of low half year of operating cash flow, we get a growth rate of about 20% per half year. And that is still significantly lower than the increase in share price and market cap, which is around about 39 to 40%. So again, with Laserbond, the reason why the share price has been increasing over the past 3 years is because of multiple expansion. The company is getting more excited about this company. They believe there is significant growth ahead in this company. And so the company has to prove this to the market. So even though we've seen some good growth in revenue and gross profit, there is potential that the market is getting a little bit ahead of themselves. And that does increase the risk moving forward for Laserbond, because if they don't perform financially in the next few years, we might see a bit of a correction in the share price, or the share price could just go sideways for the longest period of time. To really bring home the point that the main reason Laserbond's share price has increased over the past 3 or 5 years has been because of multiple expansion. Here are the numbers: operating cash flow, gross profit, revenue, and comparing those increases to share price and market. Now, I've already mentioned that the operating cash flow in 2016 and 2018 was on a low base. The 0.1 and 0.2 were historical lows in terms of operating cash flow for Laserbond. And right now, in the most recent half year, they received $3.02 million of operating cash flow. Gross profit from 2016 to 2021 has doubled from 2.8 million to 6.3 million, and revenue has slightly more than doubled from 5.8 million to 12.9 million. But when you look at the share price and market cap of Laserbond, it's significantly more than doubled. It's gone from 13 cents to 94 cents, and the market cap's increased from 12 million to 90 million. So it's way more than doubled. Way more increases in the valuation of this company compared to the financials. So that should tell you that the main reason Laserbond's share price has increased is because of positive sentiment. It's because of multiple expansion. And that is telling you that there is a possibility, unless the financials can catch up over the next few years, there is that risk that we might see the share price of this company just level off or even have a bit of a correction in it. That's always a risk when you see a share price of a company increase because of multiple expansion. In terms of whether Laserbond's valuation is a buy, hold, or sell, I wouldn't call this a buy just because we've seen significant multiple expansion over the past 3 years, and that's always a little bit of concern to me because you might be buying at the top, you just don't know. And the main thing I'd be looking for here in the next half year or year is significant increase in operating cash flow, gross profit, and revenue to justify this rapid increase in the share price of Laserbond over the past 3 years. If we don't get that, there is that risk we might see a bit of a sell-off in the Laserbond share price. So definitely not a buy. I wouldn't call it a sell either, because the financials of the company have been increasing, but there is a risk we might see the performance of the share price for this company underperform the market. So overall, if I was a holder of Laserbond, I'll probably keep on holding it and just see what the half year the half year numbers reveal in February, and then the yearly numbers reveal next August. And I definitely would not be selling just because we're seeing multiple expansion. But I wouldn't be buying. And so that means if I'm not selling and not buying, I'll definitely have this as a hold. Overall, even though there were 2 buys in the financials and the sentiment for Laserbond, it's just the valuation that is holding me back from taking a position in this company. And really the last half year numbers, net profit after tax did increase year on year. And I am a little bit concerned that the market is maybe getting a little bit ahead of itself. And I do think there are parts of the market, sections of the market, that do believe that the Laserbond financials will significantly improve in the next 1 or 2 years. And they're the ones who are driving the share price higher of this company. I'm willing to be a little bit patient with this company just to see how they do perform in the next year in terms of profit, operating cash flow, and revenue. If we do see significant increases in those metrics, that will justify how the share price has been performing in the last 3 years. So at this point in time, Laserbond is on my watch list. I am going to be taking or paying close attention to how they do perform financially. So overall, just a hold for me. If you do have differing thoughts, if you think this is obvious buy or maybe even obvious sell, I'd love to hear your opinions on Laserbond, so leave that in the comment section of this video. And the last thing I should say is this is not a recommendation to buy, hold, or sell. This is just my opinion. I'm just trying to give general advice. If you do need some financial advice for yourself, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.